Hello, everybody. Thanks for coming tonight. It's really good to have you. My name is Jeff Gibby, and we're here today to talk about a project that Steve and I have been working on for well over a year, I'd say, and we're very, very proud of it. A lot of you probably already know Steve. Steve's a very, very good technician and one of the most entertaining speakers, I think, in the industry. He's been very, very patient working with the Metastock team. We wanted to kind of create a definitive product around kind of like what he teaches, and it was a bit of a trickier undertaking to get started with because a lot of the patterns that Steve uses are very visual, but it's been a great cooperative effort. Steve's somebody that we have a lot of respect for over at Metastock, and we just absolutely love working with him. We've been a business partner with Steve for years now, and we consider him one of our most valuable players. So with that being said, Steve, to give you a little bit of credentials for him, has got over 30 years of market experience. 19 of that is actually teaching his candlestick patterns, and we just think the world of Steve, and that's why we've kind of developed a product with him. So I think that's about what I can say for you, Steve. I'm going to turn the time over to you.
Okay, all right. Okay, well, welcome everybody. We've got our members in tonight as well as a lot of Metastock people in. So what I'm going to do, and this is going to kind of be a review for some people, but more of an introduction to people that aren't familiar with candlesticks, and kind of going through the philosophy or the concept of candlesticks. So as you may know, I've written 3 books, High Profit Candlestick, Profitable Candlestick Trading, High Profit Candlestick Patterns, and Candlestick Profits, Eliminating Emotions, basically because I was one of the worst investors in the world. I was a stockbroker for 8 years, so there was a bunch of people you have to feel sorry for out there. I got out of the business because I realized that brokerage firms have no more idea about what's going to go up or down than anybody else. Then somebody dropped candlesticks on my desk, and it just woke me up to the fact that prices do not move based upon fundamentals. Prices move based upon investor sentiments. Is that better, Robert? I sound far away. A lot of people like to have me that far away. Okay. So anyways, what I discovered as I went through the years is we were looking obviously for the big price moves or the good trades. And when I started learning candlesticks, I found out there was patterns and signals that told me not only when to get in, but also when to get out. And I usually illustrate to people, do we always get 80% gains on our trades? Definitely not. But most people investing have a hard time even making money, let alone putting themselves in situations where the probabilities are greatly in their favor. They're going to be in the right direction at the right time. So adding elements of other technical indicators, like our T-line, like the 50-day, the 20-day, and the 200, which isn't on here, or looking for setups where we know from Western terminology where breakout situations will occur, especially after candlestick signals, that we have a much better degree or a much higher degree of being in the right position at the right time. So as Jeff was mentioning, we started working about just over a year ago on how to define or refine the visual signals and put them into formulas that can detect these patterns. And fortunately, Metastock's got a tremendous, software writing group. So we were able to work with the 12 major signals and with the patterns. And what I did for them was I kind of did a quantitative evaluation of what would be the best signals and patterns. Now, I'm constantly asked, which are the best signals or which are the best patterns? And the answer to that is none of them are any better than each other. It's what the market conditions are at the time, and it's not like you're having to learn 50 or 60 signals, which there are out in the candlestick universe. All you have to do is learn the 6 bullish signals and the 6 bearish signals that are going to occur probably 99.9% of the time. And once you understand those signals and recognize them and understand what the psychology was behind them, you're going to have a tremendous grasp of what goes on in price movements, about to the same degree as what you would expect a seasoned investor of 30 or 40 years would have. So some of the technical indicators that we're going to go through is obviously the T-line. The T-line is one of our major indicators that is very simple. If you see a candlestick buy signal and a close above the T-line, you can stay in that position as long as it doesn't close back below the T-line. And the T-line kind of provides a very comfortable trading format. We don't want to have to be, or I don't want to have to be watching to see if every signal is going to be a reversal and taking profits and then getting back in. If we just add a simple indicator like the T-line to our strong signals, that just keeps us in positions that we should stay in until we see that candlestick sell signal and a close below the T-line. We can also recognize patterns like the T-line crunch, where they can't close it below the T-line, and that kind of crunches up through a resistance level so that you're constantly staying in a situation where otherwise you might get a little bit nervous about holding onto a position that's not moving for quite a while. Identifying the big, huge signals like the long-legged doji. When we understand what this means, we have a much more clear format of what to do based upon seeing these signals. I am breaking up. Okay. I hate doing that because breaking up is so very hard to do. And we can make decisions based upon some of the simple rules that are applied to our signals. For example, the doji rule. If we see a doji with stochastic still heading up, we'd have a simple rule of a doji. We know it's going to move in the direction of how they open it the next day. That makes it very clear that if they open up positive, we want to be buying because that tells us the 50-day moving average wasn't going to act as resistance anymore. If we see a series of dojis and then a close above the T-line, we can scan for these type of setups, and we don't, even if it's on the first signal, hammer or doji, we can analyze much more clearly what's happening down here and when to be buying. And this is a big aspect of candlestick analysis, is that it creates the timing for us exactly. We don't have to be, like in fundamental analysis, we don't have to be buying something with the anticipation that it might go up if everything works and everybody else likes it. We can see exactly when everybody else is liking it. Whether we're going long or short, we can scan right now for their best friend, a doji followed by a gap down. So as long as we know common price movements, such as you come up away from the 50-day moving average or the 200-day moving average, and you come back to it, if we can see exactly what's going on in investor sentiment right at those resistance or support levels, we've got a huge advantage by getting in right at the time that we can see everybody else is deciding that's going to be acting as a support. And I always go back to a reference of somebody asked me a few weeks ago, how many days do you have to hold on to or watch a position before it confirms that you've had a reversal? And in candlestick analysis, the answer to that is 0. If you see a candlestick signal, especially bouncing off a major support area, confirming the next day, we're buying immediately, which does 2 things for us. Number 1, it's getting us into a profitable trade early. And number 2, if that trade doesn't work, we're out immediately because it's going to show us that so it's better to get into a position just as it's starting versus somewhere up here and then having to pull back and you have a much bigger loss on your stop loss situation. Morning star signal, smack dab on a support level. The more pieces of evidence that we can put into our analysis of where the buyers are stepping in, please identify exact areas. You're looking at them. And that's why you've got this yellow area. If I'm looking at this and I can see they've pulled right back to a support level, this is just common sense investment perspectives put into a graphic depiction. Where do you think the big money is going to buy if they see it drifting and slowly coming back? They're not going to buy until they see if it's going to act as support right on the T line or on the 50-day moving average. Is it supporting there? Some people may have to take 3, 4, 5 days to confirm that. We can see immediately there was a morning star signal. We want to be buying on the signal confirmation, which is also getting evidence, but that was the support level. Same scenario at the obvious resistance levels. But if we can see them come up and fail, come back up and do a candlestick sell signal, that's just telling us that that is obviously where we want to be starting to short a position. So what are we looking for in signals and patterns? We're looking for what the investor psychology of what usually happens with investor sentiment. Where do most people sell? They panic sell at the bottom. And a lot of people say, well, where the heck do we grab for the fallen knife? Candlestick analysis makes that a much easier identification, in that if we see a doji in the oversold area at the bottom of a downtrend, this far away from the T-line, one of the caveats we have about the T-line is the further away you are from the T-line, the higher the probability that it's going to come back up and test the T-line. So if we see a gap down doji, the next day they open up positive, very simple. Where's our first objective or our first target? The T-line. Worst case scenario is it comes up to the T-line and fails. We're back out of a bad trade with hopefully a small profit or even or at least a break even. So this is the reason we're going through this is because Metastock, which is a very good charting system, has the capability of doing the scanning for us. And so we can go out and we can scan for these patterns that I've put into a kind of a quantified basis. Your best friend is just a huge high profit trade. Whether it's a signal followed by a gap up in the oversold area, that signal followed by a gap up tells you exactly what's going on. The signal itself, which has been identified for over 400 years by the Japanese rice traders, followed by a gap up, tells you not only was there a reversal, but the gap up told you there is a lot of strength coming into that reversal. We want to be in that immediately. And fortunately, or unfortunately, fortunately for me, being one of the worst investors in the world, was I could never figure out where to put a stop loss. Because when I was buying before candlesticks came along, I was buying because I was smarter than everybody else. And if I thought it was going up, if it turned around and went down, I would say to myself, oh, I got to hang on to this because people that aren't as smart as I am haven't seen the logic of why they should be buying this. And it would go down, go down, go down until the point where I couldn't stand it anymore and I'd sell out. And I'd always ask myself, how come when I sell, it immediately turns around and goes up? On the other hand, there's a concept where a lot of people say, boy, if it was up a little bit, I would sure look stupid if I had a profit and I'd let it go back to a loss. I better take my profits real quick. So back then I was hanging on to my losing positions and getting out of my profits real quick. And that concept or that process is called eating like a bird and pooping like an elephant. Fortunately, when candlesticks came along, it changed my perspective. I was buying at the bottom. I knew where to put my stop losses. And I knew that when I saw a price pattern or a reversal signal, I knew at least I'd be in the right direction at the right time. Through the years, I discovered that the signals, such as a doji followed by a gap up, were the ones that are producing the big, huge price moves. This is why we call it your best friend. Anytime I see a doji in the oversold area and they gap it up the next day, the probabilities, and I use the term probabilities, is that you're going to make money with that trade a high percentage of the time. And on top of that, not only are you going to make a profit, but more than likely you're going to make a good profit just based upon the characteristic of a doji followed by a gap up. So these are the type of things that we can set up very simple scans for, is that doji in the oversold area followed by a gap up. That's going to put you in a position where the probabilities are greatly in your favor that not only are you going to make money, but you're going to make good money. Other signals like the left-right combo, whether it's long or short, is a doji followed by a bearish engulfing signal. Very simple. It's usually an indication that there's been a drastic change of investor sentiment. So taking the individual signals and applying them to a group of trading days gives us these patterns. And as we go through these, a fry pan bottom, you couldn't trade this no how. This was just junky trading. But the Japanese rice traders have identified this for us, that if we see this indecisive trading and they gap it up out of the other side, we're going to have a very strong price move. And I've discovered through the years that if you get a little dimple right here, you can pretty much measure that this is the halfway point to the breakout to the other side. So there's a lot of times I'll get in right here and then all of a sudden see that it's not going anywhere, get out of the trade, but I don't get rid of this chart. I look at it over here and say, all right, we're about the halfway point or the other second half. I want to be buying in here. So what does this type of analysis do? It pretty much tells me that I could be in a possibly good, strong trade, and the timing to get in that trade is pretty close. I don't have to be waiting around to see whether this trade is working or not. So that fry pan bottom, this is what we call the classic. There's a big rounding bottom, and where does it usually break out? Right about where the pattern began. Then what do we get after a fry pan bottom? A very strong price move. Then it kind of consolidates and then starts back up. That takes us into our J-hook. What's our prerequisite for a J-hook? A strong price move, then consolidation, and then the next wave to the upside. So when we have these type of patterns that we can identify, it makes us timing-wise and profitability-wise extremely put into a much better position, because we don't have to be waiting around. We don't have to be depending on somebody's analytical ability to tell us whether a company's doing well or not and how it's perceived in the market. We also have capabilities that we don't have to be waiting around for this to break out. We can find it, or at least visually see where would be a place to put a buy stop, that if it came up through that level, we're in the trade and at the right time. We're in at the time that it's breaking out to the upside. So the visual capabilities that we have with candlesticks, if we can identify what the patterns are, we can identify when it's about time to get into a trade. Again, there's that left-right combo right at the same level that this pattern started. What do we know about the left-right combo? That we're usually going to have a very strong price move. If we have a very strong price move at this level, what's that telling us? The fry pan bottom is breaking out. We also have the capability of identifying the slow curves to get these huge moves. And then we've also got simple exit strategies on these type of things based upon going from the daily chart to the 10-minute chart. I guess the fractal part of candlesticks is these signals and patterns work just as well on a 1-minute, 3-minute, 10-minute chart combination as they do on a daily, weekly, or monthly combination. These are the type of patterns and signals that give us excellent trade setups. There's that slow curve. There's that doji right here at the resistance level. What's our simple rule of a doji? If they open up positive the next day, it's going positive. Probably the same magnitude, at least, of this. Puts us in a position where if there is big price moves, we've got the probabilities that we're going to be sitting in some of those big price moves. Breakout is obvious. Broke out through the 200. We can identify what type of investor sentiment is coming into these type of pattern breakouts. So if we've got the scanning capabilities of identifying a fry pan bottom setting up, all we have to do is use our simple rules. If we saw this fry pan bottom setting up right here at the 200 and it did a doji, very simple. If it opens positive the next day, we don't have to wait for confirmation. We can be buying immediately and getting into a position much well ahead of everybody else waiting for further confirmation. The rounding bottom and slow curve, I would love to scan for these all day long because I know what the results are coming out the other side. So whether you're buying the stock or trying to time a good option trade, these are excellent setups that again, they're excellent setups not because there's anything magical about it. It has worked day after day, decade after decade, century after century. This is that slow investor build-up ready for a breakout to the upside. And this is what we expect. We expect big moves. We also know that if a trade fails, where it shouldn't come back to, it shouldn't close back below the T-line. So not only do we have setups that allow us or tell us when it's time to get in, we also have the same setups that tell us when they fail and get out and move on to the next one. One of the things that I had the hardest experience of learning was how to get out of a bad trade. I mean, getting out of a bad trade is kind of that ego smack in the head that says, boy, were you stupid. But you're not, what I discovered was that you don't know what's going on. The probabilities tell you which way things should be going, and that's just probabilities. When they don't work, it just tells you get out of a trade and go on to the next one where the probabilities are, again, back in your favor. Slow curve, high probability results. Slow curve, gap up through the resistance level, puts us in a nice uptrend. What I'm trying to do when I'm looking for a good trade is if we know the markets are heading up, I'm trying to find the price pattern that's going to make inordinate profits, not just an uptrending stock in an uptrending market. I want to find the ones that are moving much more exuberantly. And notice what we can identify here. Strong price move, an indecisive pullback, and what starts the next move up? This kicker signal, which is one of our strongest candlestick signals, reversal signals. And if this is starting back up, what type of pattern do we have? A J-hook pattern setting up. So we visually can see what the patterns are setting up, and we can visually see when it's time to get in and out of these patterns. Again, that slow curve. The reason I like to show these is I've just made so much money over the past couple of years coming off the slow curves because we know what the results are. This is human emotions building up, getting confident, and boom, they take it up big. So if you're buying calls right here, you're not making 20, 30, 40%. You're making 200, 300, 400, 500% on your calls. Yes, never enough money, Scott. That's my feeling too. I can buy positions and I can be fully loaded and still finding more positions that I'd like to have money in. But at some point, you've got to use your money management to say, all right, here's my positions. Now I have to manage them. And if there's a position that doesn't look real great, why stay in it? We have the benefit of supply that if we have a position that doesn't look good, close out the position and move on to one that looks a heck of a lot better. When to buy? Right here when you start breaking out through this area. Are you going to always get big price moves? Not necessarily, but the probabilities of being in a big price move are greatly in your favor. These are the type of setups I try to find so that I've got a good move into the next area. And because we have the setups to say, when is it time to buy? It's time to buy when you see it break out through the pattern or confirming the pattern. And when is it time to buy? When we're confirming the next pattern, the J-hook pattern. So at least gives you a platform to be in trades at the right time. Fry pan bottom, price move, J-hook pattern, it's time to get back into this trade. If I took profits right here, I'm ready to get back in over here knowing that if this is wave 1, wave 3 is going to be the same. So the opposite of the fry pan bottom is obviously the dumpling top, a slow curve. Basically, we got a doji followed by a gap down, so start shorting this because what are the expected results? Just opposite of the fry pan bottom, there's going to be a strong move to the downside. Carlos, sometimes it all depends on where the market conditions are. If I can see the market in general starting to fade off or sell off in an overbought condition, I will usually I'll have a stop somewhere on an intraday basis that if a price moves back to this certain level intraday, I want to be out of this position because that would tell me the bears have too much control. On the other hand, the other part of it is the open and close are the important elements for the Japanese rice traders. It might be that if this trade closes more than halfway down the candle of the previous day and it's starting to roll over, I'll close out then. So that's all part of our analysis or teaching is when do you take profits, where do you set your losses, what do you do to enhance your exit and entry strategies based upon the price movement, and on top of how to use the gaps and moving averages, everything else that we can add to improve our probabilities of being in the right trade at the right time, or especially identifying the pattern. The pattern is the number one. The signals and the patterns are the number one criteria for when to get into a position. If I can see a candlestick pattern set up, I know that I'm looking for probabilities of, or not probabilities, but evidence of continued buying after the pattern. That gives me a much greater sense that I'm in the right position at the right time, confirming the pattern. Just a very symmetrical, and remember, when we teach the doji, remember the J-hook pattern is a very high profit trade for us because it identifies a reversal versus just a profit-taking pullback. So if we've got a strong price move, notice what the characteristics of this pullback is. It's very indecisive, a lot of little indecisive trading days, dojis and spinning tops, and then when to turn around after doji, bullish confirmation, closing above the T-line, that told us wave 1, wave 2, wave 3 of this J-hook pattern was in progress. So again, this is not rocket science. This is just taking the information that the Japanese rice traders have provided for us over the last 400 years. The one thing that we always have to keep in mind is that the family that developed candlestick signals did not become wealthy in Japan. They became the powerhouse in Japan for centuries, and it was all because they were buying and selling based upon human emotions or human sentiment versus the fundamentals. And to put it in a very simple format, candlestick signals are merely the graphic depiction of what's going on in investor sentiment. The buy point can either be here or here. As long as we can identify the pattern, we know what should result. If we're buying here, we first have to see whether hold on to it to see whether it breaks through here, or we can buy it here, knowing that it broke through. That the probabilities after that are that we're going into wave 3, wave 1, wave 2, wave 3. Very simple. Wave 1 and wave 3 are usually going to be equivalent after the J hook. And if we can identify the pullback, there's a left-right combo, smack dab on the 50-day moving average, and they gap it up the next day. That's all the elements we need, or that's more than the elements we need to tell us there's been a reversal. And then all we have to do is hold it until when? Until we see a candlestick sell signal and a close back below the T line. Let's see, did we do that one? The gap up through the resistance level. We also have the scoop pattern, which is very easy to identify. You see the little buy signals down here after this pullback, but the true factor was there was a flat handle here. So either this was going to act as resistance or this was going to act as a scoop that was going to slingshot you out into a much higher territory. And the scoop pattern doesn't have to have a very long handle, just a flat trading area followed by a scoop pattern. So this makes it very simple. We're buying here. Where's our potential resistance? Right here. Or if we can identify that this was a flat handle, that if it got up here, we're looking to see whether they're going to slingshot it out past that level. Just a very simple visual analysis, and all we have to do is use our scans for bottoming techniques in here, and then go back and identify what type of pattern we're involved, and that can either be a inverted scoop or, like we saw before, a bullish scoop. And the belt hold is another very effective trading technique, because when you see a belt hold, what's it basically tell you? It's told you that they took out all the sellers. There is no more sellers anymore. They've taken them all out. The bulls have stepped in, and now there's no sellers in front of you. So you had a sideways trajectory. You had a belt hold. Now your trajectory becomes a very strong uptrend. Also tells you that it's good trend continuation. If there's some buying and selling going on, if they wipe out all the sellers, usually the trajectory after that is going to be very strong. Anytime I see this, I'm looking for the next buy indication, because there's not going to be that many sellers in front of me anymore. This is a very effective buy signal, just because of what it demonstrates. Another one, belt hold. They've wiped out a lot of sellers. That means there's no sellers in front of them. What pattern is this setting up? Well, I can look here and see, well, this looks like it's bottoming. Got some dojis, bullish confirmation, but I can easily see that this is a flat handle. I know what my game plan is. If this starts trading above the T line, I want to be buying, because if it gets to this resistance level, it may not be a huge profit, but there's a prospect that if they break through this handle, which is pretty good, that you're going to have a much bigger profit as it slings through. So the information that is built into the signals and the patterns help us also to easily identify trends or do trend analysis. As we can see, the Dow has been in a channel. There was a big, huge Morningstar signal right here. Told us that our next trades were to the upside. Now when we got up here, we had kind of a little J-hook pattern. Instead of failing up here, the J-hook pattern told us if this is wave 1, this was wave 3. Obviously, wave 3 is going to go past this level. That kept us from selling out up here at the obvious resistance level and keep us into these trades or in the market, provided we don't see a candlestick sell signal and a reversal. Now, this is kind of small, but yesterday the Dow closed right about on the T-line, and today it opened and traded higher, which told us the T-line was still going to act as support. At the same time, the NASDAQ, which had been trading below the T-line, did a kicker type signal back up above the T-line today, which tells us there's going to be more upside. So we can be holding our long positions or adding to our long positions with a lot more confidence even though we're well up in the overbought condition. And notice back here on this reversal, we had a little kicker signal in the NASDAQ, which told us we were probably in a good uptrend after that point. What are the simple and exponential moving averages? On here, I think this is the 200-day. You got a 200-day simple, a 50-day simple, and the gray line is a 20-day simple. And the reason for that is every major money manager around the world uses those moving averages to make their decisions about their portfolio. And then the one that is very effective as far as the short-term trading is the T-line, the 8 exponential moving average. And I tell people, you don't have to take my word for it that the T-line is very effective. Throw it on your charts and then go back and just see what it does in previous trends. We've had John Bollinger on. He's got the Bollinger Bands. We've had my late friend Dave Elliott with his mobile bands. The Ikachuki Cloud. All sorts of trend indicators. But the T-line is the best one I've ever found as far as accuracy. So essentially, candlestick analysis basically puts us into situations where we can be in high profit trades. There's our little J hook, very simple. Buying on a positive open after the J hook tells us we're breaking out. Do we always get into positions at 15 and sell 2 days later at 45? Definitely not. But we're always in situations or placed in situations where the probabilities of being in a big price move are in our favor. I know that if I consistently buy charts that tell me that have big upside potential based upon the patterns, I don't have to hit very many of those each year to have a big, huge overall return for the year. Right now, we were recommending AMKR because it's got this nice J-hook pattern. We've been buying it over the last couple of days. What do we expect? First of all, to get to this level. And if it goes through that level, where's it going to go to? Well, if this is my wave 1, wave 3 is still a lot higher. Same scenario on the short side. We shorted this one a couple of days ago. It popped up a little bit over last today. But we had a doji, left-right combo to the downside, which told us we were probably wave 1, wave 2, going into wave 3. Same scenario here. When was it time to buy? Bullish Harami, uptrend, consolidation. And then when he gapped up through this consolidation and did a doji and then opened positive the next day, that told us we had a very simple pattern, which we call the doji sandwich. A bullish day, a doji, a bullish candle. The doji being the sandwich in the middle. And what's the result of a doji sandwich? More upside. So essentially we could see we had a wave 1, wave 2, wave 3 was being kicked pretty hard going into that. So we knew we had a high probability of being in a profitable trade at that point. We're looking for these breakout situations, a kicker signal, taking you right up to the 50, and a doji. Makes it very simple. We're in an uptrend. If they open up positive, what's it telling us about the 50? It's not acting as resistance. Are we going to get big moves like this? Not necessarily, but at least we know we're going to be in the direction that we should be. And then hopefully, sometimes you're going to be in big price moves. There's our best friend. We can scan for a best friend. We can make our analysis that we've had a wave 1, wave 2. Now we're going into wave 3. Where do you think wave 3 is going to go to? It's going to come back up here to the trajectory of that trend and then possibly continue at a 45-degree after that. So the reason, again, we recommended AMKR, because we came out of a big fry pan bottom. What do we expect after a fry pan bottom? A good, strong price move. If it starts pulling back and does a J-hook, what do we expect after that? That this wave 3 is going to be the same as wave 1. We've been buying this over the last couple of days. Same scenario with go-go. Fry pan bottom, breakout, pull back, and what do we have right here on the 50? A morning star signal telling us that they've that's the end of the pullback. But if this is wave 1, wave 3's got more upside. Why is AKM a fry pan and not a slow curve? Usually a slow curve is going to be at the top of a trend, whereas a fry pan is usually a much bigger, broader pattern. And it doesn't really matter what you call them, whether you want to call it a fry pan bottom or a slow curve. Usually a slow curve is a much quicker, a much bigger pattern. Slow curve usually is an uptrend, and then just a slow curve getting ready for the breakout to the upside. Why is Dow not a kicker? Why is Dow not a kicker? Let me go back to the Dow. Because if you can see this, remember, a kicker signal opens at or above the previous day's open and goes the opposite direction. This basically opened right about where it closed the night before and went up. Okay, now the nice thing about the signals and patterns is they usually produce high probability results. And so fortunately we got Jeff here tonight to show how that's being implemented into Metastock and some of the techniques that Metastock's using to identify these high profit patterns and how they formulated for them. So with that, I'm going to sign off, and I'm going to let Jeff come on and show what's been put together for all of this. So Jeff, let me close out my charts, and I'll let you come on.
Thanks, Steve. That was great. I know you guys have all been. I've seen the chats coming in about how you're interested in seeing how this is implemented in Metastock, and so I want to start by showing you just a little bit of a quick walkthrough. I don't have a heck of a lot of time right now, but I want to kind of give you an idea of what's included in this add-on. We spent a lot of time on it. It's something that I'm really proud of, and I think Steve just did an awesome job create it. So we already talked a little bit about Steve. Here's a pretty picture of his box. I want to kind of just give you a list of the identified patterns that we've kind of went in and coded. Oh, my volume is low. Let's turn that as I can. How about if I speak into the mic? Is that better? Okay. Well, it's as loud as it can get, and I'm glad it's get better and that it works. My marketing guy likes me to lift the microphone just up a bit above my mouth so there's not a little bit of a psst when I talk, but I'll talk right into the microphone for this one. First of all, Stephen, this is a product we're extremely proud of. This is the patterns and kind of how we decided to organize the patterns that we identified in this candle pattern expert. So I'm going to show you how this works, but here's basically kind of what we're identifying. We're doing the fry pan, the belt hold, the dumpling tops, the doji BFF, the left-right combo bullish. And this is the way we've actually got it organized because we wanted to be able to kind of go in and, with our scanner, we wanted to be able to go in and say, here's the price patterns that are forming. And I'll show you in Metastock how that works. It allows you to very quickly, and I love the power of Metastock, it allows you to go in and very quickly identify which stocks have a pattern and things like that. So this is how we've identified it. What we've got is we've got 4 explorations. We've got the dynamite, the J-hook patterns, the power signals, and the price patterns. And what I'm going to do here is I'm going to go ahead and switch over and just kind of show you how you would run a scan and how that would all come together and how I would use this. So I'm just going to go ahead and start the desktop share real quick here. I want to show you in Metastock. And give me a second while that projector loads in. And maybe I'll sing some Jeopardy for you in the meantime. Oh, a joke. Okay, my favorite joke is actually Steve's joke. But I can even give it justice right now. So You know, he says it a lot better than I do. Um, why isn't my projector loading? Here, let's go ahead. Maybe I might be stuck into the PowerPoint, which would be okay. I think I can conceptualize the ideas for you. Give me 2 seconds. This is an add-on to Metastock. So I'll answer some of the questions while this kind of runs through a setup process. I know, I hate getting stuck in PowerPoint. But, you know, I'm always prepared. I always have the PowerPoint completely ready if I need it. So, this is what we call an add-on to Metastock, which means Metastock is required. And I know a lot of you have Metastock. Some of you might be listening for the Metastock demo and seeing the Metastock 13, which just had a new release, which has some really cool technology in it. Okay. Let's see if this works. Bribe Mr. Bigelow to tell a joke. CPS means Candle Profits Systems, James. Okay. This looks like it's working now. Be able to see scanning tool. It's also an analysis tool. There's tons and tons of lessons we can teach you on Metastock. I'll just say it this way. Metastock is the top-rated software in its price category, and it's been rated #1 for the last 22 years in a row. If you're new to Metastock and you like what I show you today in CPS, what you can do is I'll actually let you try it for free. And if you like it, you can keep it. It's an analysis platform. You'll buy Metastock, want to be able to kind of show them on the chart, which is what I'm going to show you with Steve's stuff, or you want to be able to test trading methodologies, and it's a fantastic platform for doing all three of those things. But we're not really here to talk about that today. What I want to show you is how we actually use Metastock to find the CPS pattern systems that we've developed with Steve Bigelow. I'm going to jump back into the room. I only have a one monitor setup. I'm actually at the Vegas Traders Expo right now. So I'm going to jump back into the room and I'm going to just make sure everybody can see Metastock and that everybody can still hear me before we go through this part of it. So let me do that. Let me go back into Chrome. We're back in the PowerPoint. What? Let's try this. Okay, cool. It went away because I switched in to the you can see Metastock, and I'm going to assume you can hear me. Both of those are going to be important. So I've got the scanner right here, and what we've got is we've got those same scans that are ready to go. So I've got my Doji Dynamites right here, which and we've got this one will find like your Doji at the top, your Doji best friend. This one will find your J-hook patterns. This one will find your power signals, and this will find your price patterns. And so the way you run this is I'm just going to select the scan that I want to run. You could run all four of them at the same time. I hear a little bit of a private message. I'm just going to come back in. There's a gray box in the center. Let me try one other thing. Instead of projecting the application, I'm going to do the whole monitor. Now, you should be able to see the scanner. You should see CPS, Doji Dynamite, J-hook patterns, power signal, price patterns. In that case, let's just run the scan. It was working okay when I shared the application. Now it's not. So let's go ahead and run the application. I guess we do need a little bit more gray matter to figure this out. And yeah, that's exactly what it is it's reading the power console as two different scans. So I'm going to go ahead and just share this part. I select the scan that I want to use. And now what I'm going to do is I'm just going to run it. So I go ahead and click on Next here in the power console. I got a list of the S&P 100 that I'm going to scan for. And that easily, I'm just going to criteria for me. Okay, and so we'll let that complete, and hopefully you guys can see that. And while that happens, I'm just going to jump back in and notice that you guys can't see anything. Metastock does work pretty awesome, actually. All right. Okay, well, let's go back into the slideshow. Obviously, we're having the trade show. Idea of how it would work. What we would do is we'd go ahead and pick the pattern that we wanted to scan for. Today, and that'll kind of come up and that'll bring a list of the actual patterns that are available. What that expert advisor is going to do is it's going to label all the patterns for you. So I found this because I ran a scan on the market, and this came up as a bear kicker today. So I pulled it up. And what we do is we actually identify and label these patterns so that you can visually identify them, which is very helpful, especially as you're learning the patterns. The other thing that we did was we also put in a full, what we call, commentary system. And what that means is, number one, what we do is we come in here and we tell you what patterns are actually forming on the chart. In this case, this is an example of the Doji Best Friend pattern. We tell you the specific criteria that actually created that alert, in other words, what the chart is doing. And then we also created what Steve calls enhancements to that pattern. So, for example, an enhancement, and it's far away from the Doji line or below the T line, in that case, we'd want to give it more credence, and it kind of helps us in terms of weighing and analyzing that. And all this happens automatically and dynamically. Basically, the whole idea of it is we wanted to provide you a really good way to find Steve's patterns in the market, because they're not really that terribly frequent, and give you the ability to just look at the stocks that exhibit the patterns that you're interested in. And I think we did a really good job with it. Steve was very, very thorough and kind of working. I think probably Steve would be showing up and it wasn't, and what was causing it to not show up, or how a certain stock had a pattern but it wasn't showing up. So we spent a lot of time on them because they're very visual patterns. Obviously, like with a dumpling top, you're looking for something very, very specific for it. So that's kind of how it looks with Metastock. What you get in Candle Profit Systems from Steve Bigelow is you get 4 explorations. Those are the explorations that kind of identify those patterns on the chart for you. You get the expert advisor. That's basically what identifies the pattern for you, shows them on the chart, and it gives you that commentary that kind of explains the pattern and tells you the kickers and what else might be going on the chart. Layouts on there. And again, it's 20 of Steve's most popular patterns, the ones that he likes to trade with. And here's the patterns that we're identifying. Now my audio is cutting in and out. Well, sorry guys. I apologize for that. Really, I am at a trade show in Vegas, and I was hoping that we'd have a really good internet connection, but I think that's really kind of the issue here. Okay, good. I'm glad you can hear me, Gary. All right. So with this one, as you guys know that have been Metastock users for a while, we really try and find like a very special product to. The Candle Profit System is a $399 product. What we're doing for those of you that are Metastock users already, we're going to give you a $299 price tag on this. We're going to give you a 30-day money-back guarantee on it. And I know a lot of you are actually from Steve's room and part of Steve's list and may not have Metastock yet. So for you, what I'm going to do is I'm actually going to let you try Metastock for free on a free trial. And the way that that'll work is you can either do Metastock Pro or Metastock End of Day. To sign up for that, you'll go up to our website at metastock.com/candlestickforuma. I've also got some representatives that are actually on the line to answer questions you might have on the CPS or Metastock or the trial and that kind of stuff. You can give them a call. Their phone number is 1-800-882-3040. I have some questions that are coming in. I'm going to go ahead and do my best to answer them. Hopefully they're not just people saying, I can't hear you, or I can't see what you're doing. So, Jay asks, will this work with Metastock 9.1? No, but actually Metastock, there is a really good upgrade price for Metastock 13. Yeah, sure, absolutely, Pat. The price of this is $299. It's normally going to be like $399, so it's only $299. That is a one-time cost. You only pay for that once, and you only offer it with a money-back guarantee. If you go to the web address at Candlestick Foruma, there's a demo that's actually kind of recorded and up online that kind of goes through like a 7-minute walkthrough. You're welcome to go through that too. It's recorded in the studio, so you'll be able to hear it maybe a little bit better. The cost of Metastock. Okay, let me pass on the chat the 800 number. We do have people that are actually in the office this late at night, and they are waiting to answer questions you might have about Metastock. So I would post in the phone number right here. Send. Okay. The cost of Metastock after your first month, the end-of-day version of Metastock's $59 per month. The real-time is $250 a month. There's other ways you can actually do Metastock other than doing it on a month-by-month lease. I'd recommend you talk through those options with our representatives because it's actually smarter to buy it as a one-time cost as opposed to paying ongoing for it. We get all of our data from Thomson Reuters. Up until just recently, we were totally owned by Thomson Reuters, but we bought ourselves back. And it's been good. We actually have had one of the most innovative upgrades we've ever had just recently as a result of kind of being in charge of ourselves again. Metastock does work on a Mac, but it requires that you use a program called Boot Camp and a program called Windows. So you have to install Windows on your Macintosh to get it to work. We don't have an e-signal version of Metastock. It's comparable with MetaTrader 4, but it's not the same application. MetaTrader 4 is kind of a bit of a free program that comes with a lot of brokers. Metastock is in my opinion, I might be a little bit biased, but it's a much more high-quality, high-tier tool. So $299 is a one-time cost for this, yeah. And then you own it. There's no additional ongoing fees. We might, it's a one-time access cost. So many products are out there that you pay over and over again for, and this one's included. This one you just pay for it as a one-time cost, and you own it forever. Also, for those of you that use Metastock and are interested, it is totally open code. So once you buy it, you can go in and see exactly what we're doing for the patterns, maybe tweak them a little bit if you want to. Don't know that I'd recommend it, but it is open code. Yeah, okay, GJ, thanks for coming. What is the deadline for the special offer? Well, it's actually good through Christmas. It's a holiday offer. We're doing some major promotion of Metastock. We just had a brand new version that has some new patent pending technology, and we're running it as a promotion for this. So there's no real hurry and no real pressure to get going, but I would encourage you to give it a shot right away before you forget. You know, Metastock. No, it is designed for Metastock. It was created for Metastock as a Metastock by the Metastock programmers, actually, with a lot of work with Steve. There on the announcements for you, it's 1-800-882-3040. Dale, I'm sorry that you're confused. Metastock is a standalone. It's a software product. It's a product that's been around since 1980, and you can consider that an engine. You can consider the Candle Profit system kind of a map system that you can plug into it. What we've done is we've taken Steve's expertise and his experience and his knowledge, and we've worked really hard to actually put it into our technology, which will allow you to do full market scanning and understand the markets and all that kind of stuff. So I hope that makes it a little bit more clear for you. Oh my goodness. Bad boy, if you want to order it today, you can have access to it tonight. It's an instant access. You get a full unconditional 30. Thank you for asking. The monthly charges for Metastock is $59 a month or $250 for real time. So $59 for end of day and $250 for real time. And that actually comes with all of the Thomson Reuters news and a product that actually Reuters put together that costs about $1 billion for them. So it's a very, very intense application. Metastock does not have a facility to place orders. Watch for that in 2014, Tom. The cost on the real-time version is $250 per month, JR. You can also buy it as a one-time cost as well, which would be $13.95. As a member of Steve's Room, you could get it for $11.95. Upgrade cost, that depends. We're not going to start on an upgrade for Candle Profit system right away. We're really happy with it. We've been working on it for about a year now. But if we do upgrade it, like in the past when we've upgraded add-ons, it's been maybe like a $10 disk fee or a free download. We haven't really ever charged an upgrade cost for an add-on. Okay. Oh, Randy, that's great. I've been a Metastock user for years and a SteveBigelow.com member for one, and I've never been more profitable than I have in the last year. And I've already bought this add-on. Randy, we love Steve too, but that's a great. Steve, you should write that comment down and put it in your marketing. What a great compliment that is. MB, Metastock does not trade. Right now it's an analysis tool. Watch for trading functionality to be coming out in next year. Yes. Well, actually, if you're on the Metastock lease for $59 a month, there's never an upgrade cost. If you do buy it as a one-time cost, generally you pay an upgrade cost. It's usually about $100 to go from one version to the other. We do offer, great question, Nettie. We have 192 exchanges globally. And that does include Canada and all the Canadian exchanges as well. So even if you're interested in something in Australia, we have a huge user base in Australia. We have a huge user base in India. If you're interested in a market that's outside of the U.S., we more than likely cover it. Is there only a Candle Profit system for Pro? No, it will work with Metastock end of day or Pro. Thanks for using Metastock for 10 years. I appreciate that personally. I've actually worked for the company for 18. And yes, the Metastock Expert Advisor will work on any time frame, end of day or real time. The codes are open, George? Oh, the phone number doesn't work. Hold on just a second about that. That's embarrassing. 1-800-882. Here, let's just go to the Metastock.com website. Sorry about that. The phone number is 800-882-3040 or 3045. Both of those numbers should work. Let me just, I'm just testing it on my phone. That's not okay. Let me get a phone number for you. That's a little bit embarrassing. Sorry about that, but I do appreciate your coming in and trying to. Metastock.com is where we're going, and so, it is 800-882-3040. Okay, I had it right. 1-800-882-3040. Really embarrassed with myself. Try it again. It could also be, well, they actually have a pretty sophisticated queue backup. So you should, even if they have a lot of people on the line, they'll get to you. So, okay, good. I'm glad. Thanks for calling. There is no extra cost for the Canadian exchange. You can alter the codes; they're totally open. I would make a copy of them first, George. Yeah, you can. I mean, basically, Jim asked, is it possible to get a Metastock chart set up the same way that Steve does without all the, well, you wouldn't have all the expert signals, but you just add the same indicators that he uses and change it to a candlestick, and that would work for you. Absolutely, Jim. What if I download it on my laptop and get another laptop? No problem. Kathy, you can just download and install it again. The way our permissioning system works with Metastock is you can use it on as many machines as you want to, but you can only use it on one machine at a time. So there's no weird licensing key or things like that. You just install it. It's good to go. If you just need to move computers, you just move computers. That's totally fine. I would like to show you any charts at this point, Tom. But actually, call in, talk to one of the guys, and have them send you a couple screenshots on it. I don't even want to try and share my screen again. It wasn't a comfortable experience for me. If you buy a Metastock Pro, the real-time version for $11.95, the reason you'd want to do that, I'd probably recommend you do the free trial for Metastock Pro just because it's free. But you can also buy Metastock as a one-time cost for $11.95, and that would you'd still have some ongoing data costs. It would be about $150 per month for the Reuters news and data. George, it will work on Metastock 12 and 13 and higher. JP says, please show us the current scan. I wish I could. I really, really wanted to, JP. I've been so burned by trying to share the projection today that I'm not going to try. But we can. If you actually run, if you go up to the web page, right there, the metastock.com/candlestick4MA, I actually do show you how the scans run and kind of how to work through all that in 7 minutes or less. We don't have an Android app. Actually, we don't have an app at all. A lot of the stuff that we do and the calculations that we do, actually, we couldn't do them on an app. That might change with the Apple. I hear that new Apple that they're developing is as powerful as an Xbox 360. And if that's the case, we could probably app some of this up. But right now, it's a standalone desktop product. Yes, SR. If you have Metastock Pro, you will be able to see foreign markets real time. We have, as long as it's one of the 192 exchanges that we cover. Trading from wireless devices is dangerous. Yes, Sam, that's true, but it's also kind of addictive too. Okay, let's see. Okay. All right, that appears to be all the questions. Thanks for coming tonight, guys. Give the CPS a shot. You'll love it. I absolutely, one of my favorite products. And we worked really hard on it. I'm very proud of it. I love it, and I think you will too. So give us a call. Let me know if you have any questions. You're welcome to drop me a message or an email, and I'll see you at the next class. Thanks.
Thank you, Jeff. Thank you, everybody, for coming tonight. We'll see you in the chat rooms.